Today, Bitcoin and Ether climb after private payrolls saw their biggest drop in more than 2 years. The co-founder of Tornado Cash asks a federal judge to dismiss conspiracy charges. And Summer Mersinger, the CEO of the Blockchain Association, explains a letter sent to lawmakers warning against efforts to roll back the Genius Act. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies are in the green following the latest release of private payrolls data from ADP, which showed the biggest decline in 2.5 years. It's another sign of an uncertain labor market, compounded by a pause in some economic data due to the U.S. government shutdown, which began at midnight. As of noon Eastern, Bitcoin climbed nearly 4% to the $117,000 level, Ether rose 5%, and Solana's Sol token popped by about 7%. The moves higher come after ADP reported that companies shed a seasonally adjusted 32,000 jobs last month. On top of that, the August payrolls number was revised to a loss of 3,000 from an initially reported increase of 54,000. The weaker than expected numbers raised investor expectations that more rate cuts are coming, but at the same time, if the government shutdown continues through Friday, the September jobs report and unemployment data from the Bureau of Labor Statistics won't come out this month. The Federal Reserve keeps a close eye on unemployment in its rate decisions, and the central bank's next meeting will take place at the end of this month. Now, turning back to Sol, yet another publicly traded firm announced the launch of a treasury tied to the token. Shares of VisionSys AI, which trades on the Nasdaq, took a nosedive after it announced this morning it aims to establish a $2 billion Solana-based treasury. Okay, let's talk about the top stories. Bitcoin companies that have pivoted to AI are faring better than pure play mining names. According to a note from JP Morgan, 12 of the 14 mining companies the investment bank tracked outperformed Bitcoin by about 6% in September, led by those with exposure to high performance computing like Cipher Mining or those exploring HPC operations like Bitfarms and CleanSpark. At the same time, JPM says aggregate market cap in the miners it tracks grew faster than Bitcoin for the 6th consecutive month, driven by those businesses diversifying into AI. We've talked here on Crypto World, of course, about the trend of Bitcoin miners moving away from Bitcoin, at least in part as mining rewards shrink and AI demand grows. JPM says miners faced a 17% decline in gross profit per exahash month over month. Next, the SEC is paving the way to allow state trusts to act as crypto custodians. Yesterday, the agency said it would not recommend enforcement action against advisors for allowing crypto custody through certain state trust companies. Now, this comes after law firms Simpson, Thacher, and Bartlett sought assurance the commission wouldn't recommend enforcement action against registered advisors or regulated funds for treating state trusts as crypto custodians. The same day of that letter, the SEC's Division of Investment Management responded it would not recommend enforcement action to the commission as long as it meets some listed criteria. Now, a statement by SEC Commissioner Hester Peirce mentions that the scope of the no action letter matters and that it only addresses client crypto assets held by registered advisors or crypto asset investments of regulated funds that are subject to the respective custody provisions. Last, Tornado Cash co-founder Roman Storm is asking to be acquitted of conspiracy charges related to operating the crypto mixer. In a filing submitted to the court yesterday, lawyers for Storm argued there was no evidence he took steps to assist bad actors using the protocol, which, quote, fails to establish the essential elements of all 3 conspiracy counts. Crypto mixers are tools designed to help crypto users remain anonymous. An August news release from the Department of Justice alleges Storm knowingly operated a money transmitting business that handled criminal proceeds tied to North Korean-backed Lazarus Group. All right, for our main story, we told you earlier this week that the Blockchain Association is cautioning against efforts to roll back the first major piece of crypto legislation to become law here in the U.S. I spoke with Summer Mersinger, the CEO of the Blockchain Association, about the letter sent to congressional leaders, reaffirming the association's strong support of the digital assets industry for the Genius Act, the comprehensive framework for dollar-denominated stablecoins enacted back in July. The Blockchain Association sent a letter on Monday addressed to Senate Banking Committee Chairman Tim Scott, Ranking Member Elizabeth Warren, and other lawmakers, asserting that the Genius Act is settled law and should not be changed. You argue that any attempt to weaken Genius would undermine U.S. leadership and drive innovation overseas at the very moment we are poised to lead. Why was it important for the Blockchain Association to send this letter to congressional leaders defending the Genius Act? What was the main goal?
Yeah, the main goal was to push back on some rhetoric we heard from the kind of large bank, large institutions on reopening Genius through market structure. At the end of the day, as the letter said, the Genius law it's settled law. We need to go forward with implementation. Any delay is going to set back kind of the innovation and the process that we've seen moving forward quickly. So it really has to do with pushing back on a narrative that we are seeing from large banks and bank organizations who want to reopen the law and make changes after the fact.
Yeah, and expanding on that, the letter comes after banks and crypto firms pressured lawmakers last month over the issue of stablecoin rewards. Bank advocacy groups are warning that allowing rewards for stablecoins will lead to a rush of customers yanking funds from community banks, while crypto companies are pushing for customers to continue to be able to receive stablecoin rewards. What do you think about the arguments banks are making and the opposition they're getting from crypto firms like Coinbase, which launched a six-figure marketing campaign this week, pushing back on those concerns from banks?
I think, first of all, there's a lot of misinformation about the flight of deposits. There's no evidence that investment in stablecoin means that there are less people putting their money into community banks. There's just no evidence of that. There have been studies that have shown that with the growth of stablecoin, we have not seen a corresponding decrease in deposits at banks. So I think that's kind of the first piece of this, is that it's really not true that they are moving money from savings and checkings accounts at banks to stablecoins. I think the other issue, when you look at rewards, I really believe this is more of a competitive issue for the banks than it is, kind of this loophole that they're claiming. And with a lot of these rewards, they're offering, somewhere around 4% on your stablecoin holdings. If you look at a bank deposit account, they barely offer, it's less than 1% for the most part on your savings account. So this is a huge kind of delta. And, our opinion is, if you want to compete, if you were that concerned, then compete on the interest rate, compete on the rate, give consumers better rates for their deposits. At the end of the day, this is about what is best for the consumers, and allowing them to get the rewards by holding stable coins is the best thing for the consumer right now.
So, what would happen if the Genius Act were to be revisited per the request of banks? What would reopening the law do?
Well, the most important part about this law was clarity, giving innovators the legal clarity that they needed to continue to innovate, to make sure that these stablecoins are being issued in the US with the dollar backing. If we take that clarity away, if we take that certainty away, you're going to set back the industry, you're going to set back innovation. And so reopening the act essentially takes out the certainty. It's kind of puts everything on hold, and is the opposite of why we had the Genius Act passed. So I think it's just one of those. It's an issue where we're going to set back the industry and the innovation because we are questioning what should be settled, clear law.
So, what's next? I mean, obviously, now all eyes are on the Clarity Act, which the House passed in July. The crypto industry is hoping for comprehensive market structure legislation to become law here in the US, as the Senate is working on creating its own version. What are you hoping to see on Capitol Hill as it relates to this? And are you optimistic we could see a crypto market structure bill become law soon, like we saw with stablecoin regulation back in July?
Yeah, I am optimistic. I think probably the most important thing that we are seeing is bipartisan efforts, where you have Republicans and Democrats coming to the table saying, we have some ideas, we have some principles, and we want to work on this together because we recognize the need. That's the biggest hurdle in getting market structure done. And that's, you're seeing that happen in the Senate. And, you've got the two committees talking, you've got the House and Senate staff talking. These are really important kind of pieces of the puzzle here to get this done. So I am optimistic that they're going to get market structure done, that they're going to have a very bipartisan bill that will give the industry clarity going forward, so that, again, the innovation can happen here in the United States and not be pushed offshore because of the lack of legal clarity.
So yesterday, we reported that the SEC and the CFTC held a joint roundtable on regulatory harmonization this week. Of course, you know firsthand that the two agencies have been at odds in the past, including over the treatment of digital assets. SEC Chair Paul Atkins stressed that the SEC and the CFTC should work together so that American innovation can thrive. He pointed to, quote, decades of regulatory fragmentation, which have left innovation stranded, and said that as a result, some entrepreneurs took their ideas overseas. As a former CFTC commissioner, what do you think about these recent harmonization efforts between the two agencies?
Something that should have happened a long time ago. The two agencies should be working hand in hand. There is some kind of overlap of jurisdiction, or at least kind of bumping up against each other with their jurisdictions. And the best thing you can do for markets is provide certainty and, not make things confusing as to which regulators covering, what product, what market. So the two agencies should have always been working closely together. I think that was probably what was intended. And certainly we saw through Dodd-Frank, the requirement that the agencies work together on some joint rulemaking. So I think this is a great development. I believe that this will really, kind of push the industry forward, and we'll see a lot of innovation and a lot of new products in these markets because the two agencies are now working hand in hand versus working against each other.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.